Good morning, investors. You are now on KleverStock with me, Anunjaria, serving you the latest morning bell updates. Kicking it off with the opening bell updates on our local market. Asian markets opened the day sharply lower as regional equities mirrored Wall Street's steep overnight decline, where the Nasdaq tumbled more than 2% amid a broad tech sell-off. The downturn was triggered by a U.S. jobs report that dampened expectations of a U.S. Federal Reserve rate cut in December, reinforcing concerns that monetary policy may stay restrictive for longer. Despite the global rout, the FEMKLCI demonstrated relative resilience at home, easing just 1.24 points to 1,617.72 at the opening bell, even as technology counters dragged down markets across Asia. In comparison, regional benchmarks saw far steeper losses, with Japan's Nikkei sliding 2.07% to 48,780, South Korea's Kospi plunging 3.7% to 3,873, and Australia's ASX 200 falling 1.37% to 8,435. TA Securities said the sharp U.S. equity correction is expected to weigh on Bursa Malaysia, especially as stretched tech valuations and ongoing concerns surrounding excessive AI-related spending continue to pressure market sentiment. It reiterated that immediate support remains at the 61.8% Fibonacci retracement level of 1,564, followed by stronger supports at the 50,000 FR, 1,527 and 38.2% FR, 1,490. On the upside, resistance stays at the December 2024 high of 1,644, with 1,684 and 1,695 seen as more formidable hurdles. Separately, Rakuten Trade acknowledged the softer investor sentiment but maintained its stance in advocating stock accumulation at current valuations. The firm believes funds may already be positioning based on 2026 earnings expectations, and it expects the benchmark index to trade within the 1,620 to 1,630 range today. Among the most actively traded counters, Tangko slipped 2 cents to 1 ringgit and 1 cent, Perak Transit was unchanged at 28 cents, and Aqua Walk eased half a cent to 25 cents. Moving on to local currency updates. Malaysia's ringgit opened the day on a firmer footing against the US dollar, strengthening to 4.1515 or 4.1645 at 8 a.m., compared with Thursday's close of 4.1565 or 4.1645, despite the US dollar being buoyed by stronger labor market data out of the United States. Now, Bank Muamalat Chief Economist Dr. Muhammad Afzal Nizam Abdul Rashid noted that the latest US non-farm payrolls report showed 1,900 jobs created in September, beating expectations, while the rise in the labor participation rate underscored the resilience of the U.S. labor market. He said the combination of stronger hiring and broader labor force engagement may encourage the U.S. Federal Reserve to maintain its interest rate stance at the December meeting. Afzal Nizam explained that although strong labor members typically support the US dollar, the ringgit's early gains indicate that markets are re-evaluating the timing and magnitude of potential US rate cuts in 2026, especially with a new US Federal Reserve chair set to be appointed in May. He stressed that rate cuts are still on the table, but their timing and scale remain uncertain, and in the meantime, the US dollar is likely to stay on a positive trajectory. He added that the ringgit, which ended 0.24% weaker against the dollar on Thursday, could continue to receive near-term technical support and is expected to trade within the 4 ringgit and 15 cents to 4 ringgit and 70 cents range today. At the market's opening, the ringgit also strengthened against several major currencies. It rose to 2.6377 or 2.6461 against the yen, climbed to 4.7879 or 4.8029 versus the euro, and appreciated to 5.4314 or 5.4484 against the British pound. The local currency also recorded gains across regional peers, firming to 3.1751 or 3.1856 against the Singapore dollar, advancing to 12.7856 or 12.8356 versus Thai baht, improving to 248.0 or 248.9 against the Indonesian rupiah, and edging up to 7.03 or 7.05 against the Philippine peso. Continuing with national economic updates, Malaysia's bond market staged a solid comeback in October as foreign investors returned in force, reversing the heavy outflows seen the month before. According to RAM Ratings, net foreign inflows reached 4.4 billion ringgit, almost completely offsetting September's 6.8 billion ringgit outflow and signaling renewed confidence in the local fixed income landscape. Foreign demand was strongest for Malaysian government securities (MGS) and government investment issues (GII), which together accounted for 3 billion ringgit in inflows. There was also sustained interest in Malaysian treasury bills amounting to 431 million ringgit, while corporate bonds attracted a further 937 million ringgit. RAM said the turnaround in appetite reflected a narrowing yield differential between US Treasuries and MGS as USD yields eased when global investors began positioning for potential additional rate cuts early last month. The US Federal Reserve's 25 basis point rate cut in October, coupled with its unexpected announcement that quantitative tightening would end in December, added downward pressure on USD yields. By the end of October, the 10-year USD yield had slipped to 4.11% from 4.16% a month earlier, while the 10-year MGS yield edged up slightly to 3.52% from 3.47%. Now, this narrowed the USD MGS yield spread to 59.1 basis points compared with 69.4 basis points at the end of September, improving the relative appeal of Malaysian bonds. RAM noted, however, that the renewed strength may prove short-lived. Market sentiment has begun to soften in November after the Fed adopted a more hawkish tone following its latest rate cut, signaling lingering concerns over inflation. This shift prompted a sharp pullback in expectations of another rate cut in December. Based on data from the CME Fed Watch tool, the likelihood of a December cut plunged to about 30% as of November 20, showed dramatically from roughly 99% just a month earlier. As a result of the hawkish pivot, the 10-year USD MGS yield spread widened again to 70 basis points as of November 19, reducing the yield advantage that had previously made Malaysian bonds more attractive to global investors. Moving on to corporate news updates. Malaysia's property landscape is shifting as developers move to sell land assets, taking advantage of rising valuations fueled by booming demand for data centers and logistics hubs. Industry analysts say a wave of cross-border investment from China, the United States and Singapore is reshaping the country's land market, prompting both disposals and strategic acquisitions. One of the most notable deals involves SD Guthrie's disposal of 381.24 hectares of freehold land in Kulai, Johor. The site will support the company's industrial park ventures, which carry an estimated gross development value of 3.75 billion ringgit and sit within the fast-developing Johor-Singapore Special Economic Zone. Just last week, Crescendo Corp announced the sale of another Johor land parcel of 200.88 million ringgit, with an option granted to the buyer to purchase an adjoining tract of 249.07 million ringgit. Meanwhile, Mahse Group is pushing ahead with M Cora in Penang, a 528 million ringgit mixed development located about 450 meters from the future Bandar Sri Penang station on the Mutiara LRT line. Mahsing acquired the site from the Penang Development Corporation for 51.88 million ringgit. Other than high-profile transactions, they include Axis REIT's 800 million ringgit purchase of 55 hectares of industrial land in Seberang Perai and Gamuda's 424.4 million ringgit acquisition of 389.7 acres in Port Dickson's Bandar Spring Hill, which will be targeted for data center development. University of Technology Malaysia's Dr. Muhammad Najib Razali says many developers are unlocking value from land that no longer serves its highest potential use. He explains for SD Guthrie, converting plantation estates in Johor into cash and reinvesting into industrial parks reflects a shift to land uses with far greater return potential, especially with the surge in demand for data centers and logistics hubs. He adds that disposals strengthen balance sheet, reduce gearing and provide capital for quicker turnaround projects, consistent with portfolio optimization strategies. Najib points to Johor as one of the biggest winners, saying momentum for the Johor-Singapore Special Economic Zone, escalating data center investment and an expanding logistics ecosystem are creating powerful agglomeration effects. He says this is why SD Guthrie's land in Kulai is being channeled into Eco Business Park 8, highlighting advantages such as industrial clusters, workforce access, and strong power and fiber connectivity. He notes that other regions like Carey Island, Shah Alam, and the Guthrie Corridor remain equally attractive as developers reposition estates for higher value users. And finally, wrapping up, we have major corporate developments and deals across Malaysia. First up, we have Sime Darby Property Berhad is on track to achieve sales target of 3.6 billion ringgit and gross development value launches worth 4 billion ringgit for the financial year 2025, says its Group Managing Director and Chief Executive Officer Datuk Sri Azmir Merikat. And next we have NU Energy Holdings Berhad won contracts from Muhibbah Solar Sindian Berhad for the development of 15 megawatt large-scale solar photovoltaic plant at Beaufort, Sabah worth 16.9 million ringgit for the sale and purchase of solar materials for the project worth 39.4 million ringgit. Pekat Group Berhad's wholly owned subsidiary won a 33.8 million ringgit contract from Gamuda Engineering Sdn Berhad to undertake earthing and lightning protection systems for the hyperscale data center at Eco Business Park V in Puncak Alam, Selangor. Affin Bank Berhad's earnings slipped marginally to 145 million ringgit for the third quarter financial year 2025 from 145.8 million ringgit a year ago, as decreased net income and higher impairment loss allowances more than offset lower expenses. And last but not least, Valesto Energy Berhad's net profit for the third quarter financial year 2025 increased to 50.2 million ringgit from 42.9 million ringgit last year, primarily driven by higher rig utilization as well as lower finance costs and depreciation in the current quarter. Now that's a wrap for Moneyball Updates with me, Anujaria, on KleverStock. Thank you for choosing us, investors. Stay tuned for the next live coming soon.